Hello everybody and welcome back to the channel. Today we are taking a look at the markets and preparing for the week ahead. We do this each Sunday. I go through a list of markets that I personally am watching and I try and share some ideas and setups that I am personally looking at going into the week ahead. So without further ado, let's go ahead and jump into it. Remember, if you are new to the channel, make sure to subscribe. This is free trading content that's hopefully helping you out. And if you are enjoying the video, make sure to hit that like. So let's go ahead and take a look at some markets together. We'll take a look at the dollar for starters here today. So the dollar is on the move, or at least tried to be towards the end of last week. This is the US dollar index, and you can kind of see towards the end of the week, we had a little bit of move to the upside there. And the fears around Russia and Ukraine are still a thing. They are still relevant. They are still pushing markets around. And towards the end of last week, we actually saw the S&P 500 take a little bit of a dip, right? And this is also in response to the situation kind of being still very scary in terms of Russia, Ukraine, and the potential economic hardships that any sort of breakout or altercation could have. So that's kind of our bias going into the week is, okay, until that blows over, I am very much going to be staying on the bullish side of things like the dollar and of gold, which has been my primary focus. We'll actually take a look at gold here early on. We don't usually do this, but because it is something that I am personally trading recently, I figured it might be relevant just to give you guys a quick update on where I'm at. Last week, we entered gold inside of the VIP group here on the, 15th here. So I went long at 1849, pulled back here to support, decided to buy it there, and have been holding it over the weekend. So we'll see how things develop, but this is very much reacting to the Russia-Ukraine situation. So I am currently floating 460 give or take pips in terms of the move, and then my stop loss is locked in at 331. Pips. So not a bad spot to be in. My idea here is still bullish though. You might be asking, well, Nick, if you're still, if you're in this trade, why not just take profits on this move? Well, the reason is because I don't know that the move is over. And with things still being scary in terms of Russia, Ukraine, which you can see was the initial reasoning behind the trade, Russia, Ukraine uncertainty, until this blows over, my bias on gold is bullish. Because again, a lot of times people will try and call the top. They'll say, oh, well, you know what? Now it's time to turn back. Or, people have been trying to call the tops on this. I can assure you that that is very much the retail trader's perspective. In fact, what we'll do is just for the sake of showing that, let's go to a1trading.com, and I want to show you guys the retail sentiment on gold right now. This is going to give us a look at what retail traders are currently doing with gold as we speak. So let's see. If I can find it here, scroll way down. By the way, you guys can use this anytime you want. Just head over to a1trading.com. Okay, and look at this. 78% of retail traders are going into this week with a short position, at least in myfxbook.com's data. 78% of retail traders are short on gold as it is flying high. The reason that that is alarming is because what retail traders so often do is they see something that's gone up a lot and they say, oh, well, now it's got to come down. But gold can trend a lot longer than people expect. And for now, that is why I'm remaining open on my position. I've trailed my stop loss up above or just below this structure here, up to 1882, as we mentioned previously from the trade alert that I shared in the VIP. But for the time being, right, until this thing shows signs of reversals, I'm going to try and let it run. So we'll see how that goes going into this week. I don't think I can trade anything up here, but if price does pull back and things are still concerning in terms of Russia, Ukraine, then perhaps I can look for another chance to go long on gold going into this week. So again, that's kind of my personal position. That's my one major trade that I have on at the time of filming this. So until further notice, we're looking to trail stops and let this winner run. So again, not trying to fade the move, not trying to short against the trend, which is again what the average retail trader right now is trying to do on gold. Calling tops is a very, I mean, it's possible to catch a good top every once in a while, but it is a very tough game to play in my personal opinion. So let's take a look at some other markets that I've been talking about recently and follow up a little bit. I do actually have an interest in going long on dollar yen. We've started to see a pullback here that looks pretty good. Let's go ahead and draw in this trend line. You can kind of see, so we've made a little bit of a counter trend. So remember, sometimes you're going to get a counter trend, which is basically a trend that is counter to the dominant trend, which we can actually draw as this big guy, right? So I know that this is very, very loosely drawn, but you can see we've got the major trend headed up, and we've got a counter trend here on the 4-hour chart on USDJPY. So as price pulls back, I am actually interested in potentially going long on dollar yen with the idea being, okay, if price pulls back, where's my zone? There it is. If price pulls back to support, you've had this area where basically price has been respecting overall. You can see we've rallied off this multiple times. And so for the time being, as we dip down into this area, I am bullish on the dollar in a couple respects. Number one, I'm bullish on the dollar due to the uncertainty from the Ukraine situation. That's probably, until further notice, it's acting to strengthen the dollar, which is what we sort of saw towards the end of last week. On top of that, the dollar overall is attractive to me due to the Fed rate hikes that are expected. The forecast that is coming out for the dollar looks fairly hawkish from the Fed. And that has me bullish on the dollar. It's had me bullish on the dollar for about 6 months now. We've been pretty much only looking for longs on the dollar for quite a while, ever since we started seeing the post-pandemic lows come in, or not the lows, but the post-pandemic sort of sentiment shift towards, okay, let's deal with this inflation and get a little bit stronger on inflation. The Fed has been pretty hawkish, and that's been bullish for me on the dollar. So I am looking for this area, 115, 114.9, somewhere in that range, to potentially hold this week. It may not go right back up to the highs, but in terms of targets for the dollar yen, I think that should we be correct about this idea that there are some good targets in mind. You have a pretty good move. That's a move of 75 pips back up to this structure here, and then if price were to continue higher, you've got an even higher level up there, 116.18, give or take. That's 120, 130 pips. That's not bad in terms of targets as to where we could go relatively easily if the trend continues, right? If we do see dollar strength come back in, if we get another push like we saw here, right? If we start to see those moves, it's very possible that we could see a continuation of this trend, which is kind of my path of least resistance when looking at the dollar yen. So yeah, again, short-term targets potentially up at 115.75, 116.18, give or take, at these two structure levels. Now, in terms of an entry, stop loss placement, that sort of stuff is very important. So what I'd probably be doing is looking to put stops somewhere below the structure, right? Not giving a huge stop loss because I don't think I need to, just enough to kind of, if this zone gets invalidated, then we'll stop out and look for a new entry. But my thought here being, okay, well, you have a couple targets in mind, like I just drew up. You've got that closer one, this one here, and then you've got the further away one. So sometimes traders, what they'll do is they'll place two trades of small size, and then they'll close one out at a certain point and then close the second one out if it continues in their direction. There's different ways that you could play it. For me, what I like to do is I like to trail stops. So meaning I may pick up a position here. If price goes in my favor, I'm looking to trail this stop up. If price continues, I'll trail the stop further, right? So on and so forth. And in theory, what this does, it allows me to have a potentially unlimited upside trade, which I love the idea of. And some of my best trades ever have been trades in which we just see something like this, where you just catch the entry and it just goes and goes and goes, and I'm able to trail stops for a very long time. Those are my ideal trades. So just for an example, right? I'm not logged into my broker right now, but we did actually catch some long ideas on dollar yen here and here. Caught parts of these moves here with relatively tight stop losses. And the reason that was so awesome is because I was able to get like 5 or 6 R on this move, meaning I risked 1 R, right? And I was able to close out in the end like 6 times that risk. So had I risked $100 here, I would have racked in $600 here, which is a great risk reward, right? So that's the idea. That's why I love the trailing stops. You're combining the technical analysis, the fundamental analysis, and risk management to try and maximize the potential that you could get out of the market should you be very, very right. That's kind of my approach to trading. Now, the hidden unseen thing that people don't like to hear about trailing stops is that your win rate is very bad. It's very low, right? If I take this trade and I'm long on dollar yen this week and price goes up and then I'm like, okay, great, but I don't trail stops yet and then come back, well, I took a break even. Whereas someone else may have taken some profits off the table. Again, there's different ways to trade the markets. There's different ways that people prefer to trade the markets. And there's more than one way to make money in the markets. So you put all that together and you say, okay, well, you know what? To each their own. And that really is the truth. There's different ways to trade it, slice it, and do your own thing with it. Okay. Let's take a look at euro dollar. Another setup that I'm personally looking at this week is potentially a retest of structure here. So we actually broke out on the 1 hour chart here, this level. A little bit easier to see here on the 1 hour chart. So we had this zone where we were consolidating, And then we broke out big time towards the end of the week last week. If price gives us a little bit of a rally, I may look to try and fade that move. I may look to sell into that if I can get an entry. Then, yeah, I'm definitely interested in shorting euro dollar. I do like the idea of doing that, especially with the Russia-Ukraine situation, which has been putting pressure on the euro, by the way, because of its close proximity to Russia. We've said this a couple different times, but here's Europe, here's Ukraine, here's Russia, right? If there's tension between these two and the supply lines between these two get complicated because of that, that could cause some volatility for the euro and perhaps sink the currency and sink the trust that financial markets put in betting on the euro, if that makes sense. So, you know, that's something added to the mix that it has me a little bit bearish there on the euro going into this week. So euro dollar bearish, dollar yen bullish, gold remaining bullish, but not taking any trades until we get to a level that makes sense. Let's continue on. We'll take a look now at some yen pairs. So here's pound yen. I mentioned dollar yen. Pound yen under pressure here towards the end of the week, of course, with the news that we sort of had towards the end of the week. I believe that it was like right towards the end of the week, there was like further, I guess, progressions. I'm not exactly sure all the physical things that happened, but I know that there was statements from the White House that were like, you know, we think that there's a likelihood that an invasion is potentially coming in Ukraine. When you put all those things together, it's almost like I don't know the facts as to what will happen, right? But I don't need to. It's enough to tell me that fear is coming into the markets and putting pressure on risk on assets, right? So the pound against the yen, GJ, typically, we see the yen strengthen in times of fear, right? People buy the yen, it's that safe haven currency, as opposed to the pound, which usually gets sold against some of the other major currencies because it is a little bit more risky than the other ones. Sure, there are higher yield potentially if you buy the pound and it runs up on you, but the idea here being during risk on, the pound yen can suffer. And so we've been seeing this structure to the upside. So if you're looking at risk off and you're looking for, you know, breakouts or things like that, one thing that you could potentially look out for this week is that if things continue to worsen, watch for breaks of this structure. Watch for breakouts. Watch for moves lower. I know that's a very ugly trend line, so I'm not, you know, I use trend lines very loosely in my trading. I don't use them as, you know, precise technical indicators. However, we do still have upward trending structure. If you're very bearish on the pound yen, watch for continued lower highs. Watch for breakouts here of major structure, right? We have levels here. Let's actually zoom in and mark that. You know, you've got major support here. If you are bearish, if you think that the markets are going to continue to be scared, if you think that they're going to continue to sell off, watch for these structure points to break. I mean, to be fair to the bulls, this may be a great opportunity to pick up some longs at a discount. So what I'm saying here is, for example, price comes down to this level. And let's say that you are, I don't know, let's say you're bullish, right? You're bullish on this pair. You think that overall risk will subside, that Ukraine and Russia will calm down, and that overall the pound will still be a great buy, as it has been trending higher overall. Maybe you take a buy here. Maybe it doesn't work. Maybe price breaks down and more fear comes in, but you say, okay, well, let me get a second try on this, right? And maybe that level works. This is what I like to do in my trading. I like to mark up a couple different zones where I take a stab at something, or I try and throw a dart at it, right? I'm not always right with my perfect entries. I don't have sniper entries like you see on all the demo ballers on Instagram, right? But the idea being here, okay, I have an idea. Let's say I'm bullish on the pound yen. I do like this. Yeah, maybe I'll pick up some buys. And honestly, my take on it, so if you're asking me, like, what would you do with pound yen? Well, of course, I can't give you financial advice. I'm not here to tell you what to do with your money. But my thoughts on dollar yen are, if this risk-off fear continues, like if we see Russia-Ukraine situations be a little scared for a little bit, this thing, if it's real fear, you know, we could see a huge tank. But if we just see mild, you know, uncertainty, that may be a chance to pick up some pound yen at a discount. So I actually would look at this thing with a bullish perspective, but looking for a bit more of a steep decline, looking for a bit more of a discount on this move before trying to get long on pound yen. But I do like this quite a bit. So you can actually draw a fib here, and I believe this lines up with a 50. Yep, so there's the 50% retracement. So our swing low to swing high, it gave us the 38.2, the 50% and the 61.8. That 50% lining up with support looks pretty nice. So a little bit of patience here, but I do like pound yen long side overall. Now, of course, like I said, any trade that I take is an idea. It's not a certainty, right? So in terms of setting up a trade like this, right, we have to be careful because, again, things could completely sour with this idea. This could be completely wrong if something big happens in Ukraine. Again, I'm not a fortune teller. I don't know what's going to happen next with that situation. I can have a general idea of market sentiment, but I can't know with certainty what's going to happen from, from Moscow to here, right? I'm not a fortune teller. So what I can do is put a stop loss on my trade. So let's say that this comes into play, and let's say that something just drastic happens, something much worse happens there, and we just see this thing tank, right? I'm going to get out. I've got to get out, right? I've got to find a place to very quickly nullify the idea if I'm wrong, right? Because I can be wrong, and that's the thing that I think so many traders, they watch people on the internet who, flex big profits on them all the time and look how easy trading is and all this and that. But the reality is just, you ask yourself, what am I going to do if this thing goes wrong? Is my lot size too big? Ask yourself, because trust me, sometimes a trade looks so good and you're so confident that it's going to work out. And that's the one that just goes absolutely against you. So what I would encourage you to do is whenever you take a trade, just ask yourself, what am I going to do if I'm wrong? How am I going to get out of this trade if I'm wrong? Because what a lot of times people will do, we've talked about this many times on the channel, they'll buy here with no stop loss and just wait for the market to try and reverse. And when it never does, most of the time it will. So you'll get back out, you're safe. But the one time that it doesn't will blow your account. And a lot of times this is how new traders trade. They don't take into account that they can be not only wrong, but they can be so abysmally wrong that they blow accounts, and it can hit you by surprise. So that's the idea with the pound yen, pulling back, but keeping this thing tight because of potential fears with Russia and Ukraine. So that is my take on the pound yen with a couple of targets in mind, previous structure here and previous high at 157.99. Let's continue on. We'll take a look at AUDUSD here. So Aussie dollar. Actually looking for this one personally. If things continue to be fearful there in the Eastern Europe, looking for this thing to actually fail. So for example, if price starts to break structure and we start to see pullbacks, that could be an idea of looking to go short, as this one is most likely going to weaken should we see any sort of continued volatility there. The reasoning for that is that Australian dollars are much more risky than the US dollars, right? When you think about the global reserve, that US dollar, right, that has favoritism. When markets get scared, everyone jumps to that. Right, that's the very popular place to be, and the very unpopular place to be during fear times is places like the Aussie dollar. We came up to 0.722, and we rejected here towards the end of the week. Look for signs of continuation, maybe on the lower time frames. In terms of places we could go, higher time frame, we are still bearish on this. So if things do start to fail, if things start to show signs of weakness, you have potential moves back down to structure here at 70.95. You have potential moves to 70.53 and previous low there at 69.76. So I just would be cautious with this pair until we see that stuff blow over with Russia and Ukraine. When you start stacking things like this, real world events that are putting pressure on these markets and likely going to cause huge swings one way or the other, you just have to factor in, okay, what is most likely going to happen? And more importantly, what is the overall, what are most people going to expect and anticipate? Right now, people are very, very shook by the situation there. And so until that changes, right? And not only that, they're also very positive on the Fed right now, or at least overall. We've seen a little bit of volatility there, but overall people are expecting the Fed to raise rates, things like that. Those are all bullish catalysts for the dollar. And so as we pull back on the higher time frames, there is that opportunity for looking for discount or premium sells, in my opinion, on the Aussie dollar. Now, of course, that could change. And if it does change, this is why we use stop losses. We won't hold on to losers forever. We'll just look for, small risk and looking to manage it properly. So that is my take on the AUDUSD, is looking for signs of breakouts. Continuations this week could be interesting after that double a very ugly double top. We had wicks involved, but you can see the idea, right? Big sell off here, big sell off here. So we'll have to watch that one going into the week ahead. I do want to jump to Euro Yen. Someone had a request about this pair. Excuse me. And also Euro Swiss was another popular, but these two are very similar right now. The thing with the euro, right? The euro, this one is very, very concerning in my opinion. So yen, I'm not super bullish on, but euro, I'm probably in the short term even more bearish on, right? And the idea here being because of the proximity to the situation, the European region is put under pressure, right? And so watching for breakouts this week actually could be interesting levels for more sell side. So for example, if we were to see breakouts underneath structure and then you're looking for pullbacks and continuations, the euro yen was on a good run, but it's very possible that with all of this going on that the yen could just kind of win out in terms of against the euro, and we could see moves back down to 128.45, 127.54 very quickly should we see further complications between Ukraine and Russia. So watching for breakouts, pullbacks with tight risk management going into this week could be interesting. But again, it looked like it wanted to try and break out towards the end of last week. We'll see if we can get some volatility to continue us lower going into the week ahead. Guys, if you're new to the channel, make sure to subscribe. If you're not already inside of our private Discord channel, all of the information for that is linked down below in the description. If you haven't already joined, what we do inside of there is you can see all the trades that are being taken by myself, by Patrick, Annie, Ivan. So we're sharing our trades in real time there with full breakdowns and analysis, not just trading signals, but, you know, reasoning behind what we're doing and why, that sort of stuff. You also get access to chat rooms. You get access to our coaching webinars and a whole lot more good stuff. I'm telling you, this is definitely the place to be if you are not already in the Discord. Come join us. There's a link and promo code down below in the description if you would like to sign up and you like, you know, my trading style or one of the other traders here that you may see on A1 Trading, things like that. You can get closer with us and work with us closer inside of the private group. So check out the Discord, linked down below in the description. Thank you very much for watching today, you guys, and we'll see you next time.